I'm going to try to do my best, Andy Diamonds. Ladies and gentlemen, the Founders Podcast. We are back. I am joined by my brother in arms, Mr. Andy Diamonds. How are you doing, my friend?
I'm good, man. I'm good. It's crazy. Like, this is how we started. This is how we started, brother. Just the two of us on microphones. We've permeated the space. You know, we've got our guys all hooked up into microphones that we bought for them. We got guys clipping for us. We got guys talking to microphones for us. But it's always good just to dig your feet back into the dirt and be like, where did we start? It's right here on the Founders Podcast. It's so good to see you, Orb Wizard. What's going on, man?
Not too much. On that note, you may have listened to, if you haven't, go and check out the latest episode of the Dishing and Swishing podcast, an Orb Analytics NBA podcast. And it was a really cool moment for us, Andy, kind of on what you were just saying. A syndicate of Orb Analytics interviewed one of our data interns, and if it weren't for our other intern's vacation, would have been clipped and produced entirely start to finish without either of the schmucks that you see on this call. And that's like a really, really cool moment, at least for me. I think just from like a business organization, just seeing our guys on a call with our guys and all part of the Orb, under the Orb umbrella, was really, really meaningful. So I think we owe it to the rest of the team to hop on a mic and produce some content. Like you were saying, just the good old days, just me and Andy.
No, and I guess I'll tie it back. Yeah, now this is all not public information, but we had our Orb company meeting. I think it's our third or fourth official meeting, and it just went well, man. And before we get into the conversation at hand, we're going to break down one of our affiliate sponsors, NOVIG. They just raised a big Series B, so we thought we'd hop on the mics, give them some credit, give our honest feedback to the deal and the things that went into it. But just if you would allow me to, I'd like to just say a few words about us, man. And it's just
Please.
Are we in the same ballpark as some of these other cats? No, I'm not going to sit here and pretend that we are. But it is really cool to take time, put things into place behind the scenes, legally structure them. We talked about it, have conversations back and forth about, both of like the wants and the needs that we both see in our mind. And, I'm usually on one side of the spectrum and you're on the other side of the spectrum. And we, it's always good to find that middle. And I think we've done that really, really well, man. It's cool to see, like you kind of touched on, but even at any stage of company building, you could be raising a $75 million Series B, or you could be, just getting your first customer, or you could be somewhere in the middle. And we're somewhere in the middle of those two things. Definitely a surreal past couple of weeks for myself, and yeah, just excited overall about the company building process, man. We're doing it, man. We're in the middle of it.
100%. Yeah. I mean, I'm sure if you ask these guys if they prefer their $75 million, Series B, or they prefer the first $75 they made, they might choose the former.
Yeah.
But that doesn't mean that first $75 that they made wasn't a huge part of the journey that led them to this valuation and what they're trying to do with it. So like with that, yeah, let's hop into it. I first want to say, in case this part gets clipped, that I'm definitely partial. Like, this is a sponsor of the page. They've sponsored our company early. I really appreciate that. It means a lot. It helps. It goes a really long way for us. So like, this is not complete unbiased on my aspect. I do want to get ahead of that. These are guys that have helped us out. They've been fantastic to work with, like just the people that we've talked to from their company. And that's kind of one of my big points that I want to get to kind of at the very end, just to tie it back in after all the numbers. But yeah, awesome to hop on and talk business, and a business that isn't ours, but is they're a bigger part of our business than I would say we are of theirs. It's been really cool to work with these guys, and it's amazing to see what they've pulled off. So they raised a $75 million Series B round that puts them at approximately a $500 million valuation.
Post-money valuation, yeah. Pretty crazy.
Incredible. I think every founder, it just from the day that you start, kind of dreams of just being able to say numbers that are so big that they don't even mean anything like that. You know what I mean?
Yeah, and again, I want to echo what you said in the beginning. Like, we're definitely biased. We do like these guys a lot, and I thought, okay, what's the best way that we could kind of stand out, show support, and just give honest feedback. Give, if they were to ever listen to this, they get maybe a little bit deeper understanding of our business acumen or the goals that we're trying to achieve or how we see them. So I thought that, yes, while we're biased, I definitely still wanted to give my honest reaction to kind of the Series B as a whole. And I mean, you said it, I'm somewhere in between, like exactly what you just said. Is like every founder dreams of this moment. $75 million, $500 million post-money valuation. It seemed like, of course, it's La La Land, but my take here is that this number feels so deliberate. And in the world of like hot AI booming startup companies, this feels like a bargain. Like it to me, and maybe I've just like really just had my head down too much in the pixie dust, but it feels like an absolute bargain for Pantera Capital, who led the round, to get these guys at 75 million series. Like they could, in my opinion, and maybe you echo this, maybe you don't, they could have asked for any amount of money. Like this number feels so deliberate. Like I just feel like there's this whole layer right now of AI application companies that's maybe a Claude wrapper or something, and some of these about like a Lovable or a Replit or a Granola or some of these other companies, and their valuations are just so, to me, it just feels like a discount. So I'm really, of course, 75, it is astronomically high, and if we got even to a tenth of that in a Series B, I'd pass out
for it right now.
Yeah, and I'd love to hear your take. Does this number feel conservative to you? I would love to ask Jacob, was this number deliberate? Was this an intentional number that they were going after, and they specifically said, no, we're not just going to take a blank check, goes to the highest bidder. We really wanted a really good like lead investor like relationship on top of, we don't want to blow the top off of our liquidation preference stack. I'd love to hear your take, but this number feels so deliberate, and almost specifically in this climate, it feels like an absolute discount.
Yeah, you raised the question, and I don't know that I would have gotten there if you hadn't. I don't know that I would have seen that, and that kind of light bulb would have gone off. Because yeah, it does. There is something to not just going with the highest bidder, right? Like the idea, and it's almost crazy if a founder saying, I'm actually going to like lower our valuation and take less. Not that you should take your founding strategy from HBO's Silicon Valley, but they do a whole episode on that where they actually save their business by taking a lower valuation. I'm really curious if that was the case here, or if this was the highest bidder. You know what I mean? I mean, the interesting part to me, and I don't know if you have any thoughts on this, Pantera Capital, they are in the crypto space. They are buying into a sports gambling predictive market space. Not an exact one-to-one fit based on kind of their portfolio that just has a ton of, the companies that you mentioned. If you have any sort of crypto sounding name, they've invested in you. But this kind of feels like a little bit of a different area. And I don't know if this is them trying to diversify or if they kind of see the two in the same world, if it's all part of that. I don't know if you remember during COVID, it was like this big Web3 push. And that's kind of where all the NFT and crypto really, that whole boom was around, like, are we on this next like Web3? And I'm curious if the lines between cryptocurrency, which many would probably argue is a form of gambling, and something like a predictive market are, starting to blur, and if there's going to be this connection between the two. So that's really interesting. The number, I think that you raised a really good question. Did you think anything about, Pantera specifically?
No, I have never heard of them before. I know like the A16Z, Sequoia, Benchmark, Founders Fund. You could well, there's a whole list, and I'm sure even Bain Capital. I've heard it before.
Bane's
Um,
huge, yeah.
Bain's huge, but Pantera, I have never really done my due diligence on them before, so I could figure that they're, they'd be in some crypto Web3 stuff. That, I mean, none of it really, that didn't spark a light bulb in my eyes, and maybe it is like a pure blockchain play that Novig is trying to go after, and they want access to more talent. Not that they don't have the talent already, but maybe it is just a diversion path for an emerging company, raising this type of capital, and they want to partner with somebody who positions themselves in a Web3 an upcoming, or maybe something just out of whatever the retail grasp is today. That would be my best guess. I didn't. I'm not. I'm very under. I'm very ignorant when it comes to like the crypto stuff. This number to me, which is, it felt very deliberate, and it kind of goes along hand in hand with like what I've heard from Jacob. He seems very calculated and deliberate, and I just keep falling back on just like, it feels like with these growth metrics that I'm looking at here, and I'm happy to pop their shit for a second. $4 billion in annualized trading volume, 100,000 active daily users on the platform. We hear about product market fit all the time. What is product market fit? What is not product market fit? My take is that a lot of these hot AI companies don't feel like they have these metrics to point at, and they just raise these valuations that just feel infinite. Like there is no boundary to. So for somebody to have these metrics, it's just like this number. There's something going on below the surface about this number that maybe you just like, it wouldn't. I guess it wouldn't raise any eyeballs. But to me, I was just like, I feel like these guys could have asked for anything, and people would have been like, "Yeah, bro, we'll give it to you." Like I'm really like, I need to do more due diligence on who Pantera is and what their positioning in relationship to Novig is. But the number was just the most, like, that was the eye candy for me.
Yeah, I mean, where I'll push back that the number itself might be, priced into, is Novig has a big battle ahead of them, right? Like for them, the name of the game is regulation, and I know that you're like pretty caught up on that side. Do you want to just like explain quickly what Novig's trying to do here?
Yeah. So from, again, I'm sure people, if we TikTok, or if they see this, they'll have caveats or nuances that I just fully don't understand or grasp. But from what from my research, like Novig, they have applied for a CFTC, Commodities Futures Trading Commission, they're seeking approval to operate as a designated contract market. That's a DCM that would fully enable them, federally regulated, to operate in every state in the United States. So, long story short, they're following the Kalshi, Poly Market, even Robinhood, I think, is a DCM at this point, because they have sports contracts on the platform. But they would be thrown in essentially into a much more competitive pool of the names in prediction markets, right? So for them, I guess we could you could speculate on where Pantera was coming from, but I guess maybe the pushback on that Series B valuation, like what you're saying, is, well, what if you guys don't get approved? Then what happens? I think that's very sharp. What is your take on these designated contract markets? Like, we can get into state versus federally regulated, but are you looking at these contracts as a financial derivative? Are you going to make an argument for that, or are we gonna kind of stay in like, this is sports gambling and wagering world?
Yeah, it's a good question because they find themselves in either a really good or really bad, depending on how you want to look at it, like middle ground between the two. So you know who DraftKings Sports is, you know what they're about, you know who FanDuel is, you know what they're about, and you know what Kalshi is, and you know what Polymarket are. And there's kind of this overlap between them, specifically in the sports side, and that's like exactly where NOVIG sits. So in the past, Andy and I have kind of talked about, well, how are they going to compete with DraftKings? How are they going to compete with FanDuel? These platforms that are just spending so much ad money for every single user. And their smarter bet might be to compete with Kalshi and to compete with Polymarket and to become, they have an opportunity, I suppose, and if they can nail it, to really just explode, to become like the sports book prediction market, right? Where they are regulated not like FanDuel, but they are regulated like Kalshi. And you can bet sports on Kalshi, and many people do because they see the transparency in the market. They see, instead of getting worse odds with a VIG on a sports book, I can bet more directly into an information market and, return better prices and therefore have an actual chance to win in the long term. So they're almost like potentially in a perfect situation to allow that user-friendly and user-enhanced technology that leads to, better prices of a prediction market, but solely in sports. Because I think where a lot of people, and, if I'm allowed to throw my own opinion in there, I think a lot of people have issues that on a platform that lets you bet on war, that lets you bet on if people will die, that lets you bet on truly anything, which if you open it up to everything, those are going to be things that people end up betting on. So it's really, can you harness like the technology that makes it truly a better user experience for someone who wants to sports gamble, and then also make it available everywhere, but only confined in sports. So you get all of the benefits of a call sheet, all the benefits of a market that, people are just buying and selling on. And instead of betting on whether, the US is going to invade Iran by a certain date, you're betting on Cooper flags over. You know what I mean? Just like something that's less high stakes. So I don't know, what's kind of your opinion on how they're trying to position themselves away from being a sports book and being a prediction market that you can bet only sports on.
And that, I think, right there is the sentence that we really got to like sift through. It's like legally.
There's a lot in there, and it's crazy that whichever direction they go, and to my kind of bigger point, and then I'm sorry to cut you off, and then I can hand it back. But my kind of big point is that we have this like regulation irony where sports books, because sports gambling was illegal and it was taboo, and maybe there are good reasons for that, maybe there aren't good reasons for that, depending on what you believe. But because of that, it is regulated really strictly at a state level. It is not legally federally. So like, why are we, and this is not the first time that our government or any other government has done something potentially backwards, why are we more harshly regulating sports betting, whether you're pro or anti-sports betting, than we are the ability to bet on a nuclear bomb going off this year?
Or the stock market?
Or the stock market, or anything.
Yeah.
The point being, because this opportunity opened up, and it was really, I think, just like Kalshi and Polymarket and these businesses like just saying, we're just gonna do this, and we're gonna let the law follow us rather than like we're gonna ask for forgiveness, not permission. And it's now opened up where they are federally regulated and legal, and you can bet on sports, on who's gonna win this game, with implied odds rather than American betting odds, in a state that you can't, and that you can't bet on sports on a traditional sports book. And it's just so backwards to me that the regulation is heavier on a more controlled, less serious industry like sports, as much as I love sports, less serious than like real life outcomes, like who's going to win an election, or will people die in battle in whatever year. So that's my big thing, is like we've just found ourselves in this ass backwards kind of regulatory system here.
Well, I think you're on to something. My spin on it is that I don't think Kalshi is the right company to point at when it comes to like setting this precedent on what is what and what is not, whatever it is, because from, I've heard kind of the company talk a little bit, kind of their back history. They have been from the jump pushing to be federally regulated from inception. So that was a part of their game plan. They weren't going to go offshore. They weren't going to do anything shady. They weren't going to try to beat around the bush. They were taking liberties, but they were asking for permission. So I don't think call sheets are right, but I do think that the CFTC has put themselves in a corner when it comes to Polymarket. And when I say Polymarket, it's because I think that Polymarket, from what I've heard, and I could be wrong, once again, this is all speculation, but they operated outside of the United States of America. They operated offshore. They did very shady things. A lot of the technology that they were using were, there just wasn't that much oversight. And now they're the Wall Street darling. And now they're connected to the NASDAQ, right? And now because of their economic value, the CFTC has pushed everything. Okay, you're free to, but problem is that if the CFTC sets the bar in hell, then it's very hard for them to make any argument of why a NOVIG or another emerging prediction platform shouldn't also be federally regulated. When you did it, you made all the excuses and you turned the blind eye to the bad guy, quote unquote, the bad guy. Is Polymarket. To me, it was it's like the PGA Tour. They're allowing Brooks Koepka to come back on the tour and swing a 9-iron for, and you get reinstated his PGA Tour card when he took the bag from Live. My point being is that the CFTC has put themselves in a corner, and I think that Polymarket specifically now becomes the sniff test or whatever. You let Polymarket become federally regulated. That's my bull case for NOVIG getting federally regulated. I think the bear case is that they're rooted in, and we just talked about this, and whether you think sports is a less involved market, a higher stakes market, a lower stakes market, the fact that NOVIG is rooted in their consumers being sports fanatics, you have to then go through the same motion theoretically as FanDuel, as a casino, as FanDuel, as DraftKings, as BetMGM, right? So if they went through that process, why would you now allow NOVIG to skip that, right? You could make the argument that these contracts are a financial derivative. I actually support that. I truly believe that there's not that much different than betting on a team to cover a spread 3.5 and putting a call option on NVIDIA to hit a certain strike price after a 90-day maturity date, whatever it is. It's the same. They're the same mechanics. So I'm happy to have the argument. I'm happy to hear the debate being made for bull or bear. But when it comes to the bull case, I think Polymarket is the anchor, the precedent that the CFTC has set. And if that is truly what it's going to be, then now the gates are open. Or the bear case is that the states are going to fight and claw to make sure that specifically sports designated prediction platforms must be operated and regulated like a casino, like a FanDuel, like a DraftKings. So there's things that I'm missing. There's gaps in my kind of argument. I'm sure there's pushback, but it's real. I think the CFTC has put themselves in a very interesting position, and I guess it's truly up to the power of the state regulator. How much can the states put up a fight to, kind of dampen the flame that clearly NOVIG, they have their finger on the pulse. They're clearly offering a product that is outperforming the incumbents. That is clear as day.
Yeah, I want to get to the states thing, but prior to that, you said that really well, and it kind of made me rethink. And I think I either phrased it poorly or now just have a better, more clear way of phrasing it. But for NOVIG to compete with FanDuel, DraftKings, BetMGM, all the traditional sports books, it's not that they need to move and compete with Polymarket. It's that they need to compete with the sportsbook as a Polymarket. So if you have two regulation pools, one is, the casino sportsbook, and the other one is this Polymarket up in the air mess, but it's federally legal. If NOVIG were to just sit in this same bucket that they have, they're not going to stand a fighting chance just with the ad spend that the other guys have. Even though I think, again, they're a sponsor of the page, I like them. I think they have a better product. Like head to head, I think the pricing that they offer is just so much more advantageous. But what's interesting is if they want to compete with the people that they need to compete with, they need to be classified as one of the prediction markets over here. So I actually don't think that they're going to be cutting in. If everything goes well, the absolute best case scenario for NOVIG, I don't think they're really cutting into what will then be their peers in terms of regulatory status. I don't think they'll be competing with Polymarket. I don't think they'll be competing with Kalshi, because there's some sports trading over there, but it's not why people go to Kalshi. It's not why people go to Polymarket. They'll then turn back to their old regulatory class and now have, the leverage to actually be able to compete with those guys, because they'll be able to do it federally. And my kind of big take is, and it goes all the way back to the first question that you asked, was $75 million the most that they could get? My argument was maybe that's just baked into the risk that they don't get, approved the way that they want to. If they do, and suddenly they are federally legal, offering a better product than the big sports books, Terra Capital is going to be getting their money back when FanDuel and DraftKings show up at the door and say, you're only worth $500 million. We will take 100% of the company right now. Just like name a price. Yeah, to me, to use the word, I think that Pantera, anyone else who's investing in them, is just betting that they'll get approved and be able to be a part of the prediction market regulatory pool. Because if so, they're suddenly, looking eye to eye with the big sports books that they couldn't before, just due to how much they were getting outspent.
Are we on the same page, though, that the CFTC has put themselves in a very prickly situation with
how
Polymarket?
Could you say no? And I believe the new head of it is like very pro prediction market as like a stance. I think it's all about deregulation and everything. It's a mess. And the states' rights thing, we're now seeing individual states trying to ban and make illegal these prediction markets within their states, right? So like, it's kind of the opposite that we saw from traditional sports betting, where states started to legalize it and it's spreading. Mm-hmm. It's like, instead, it's starting federally. The prediction markets are starting federally legal and might get diminished state by state. And I think it is going to be such a mess, because every state is going to have like one of the four outcomes of, you can legally traditionally sports bet and you can legally use a Polymarket type. You can legally do one but not the other, or legally you can't do both.
Can't do either.
You can't do either. And it is going to be a total mess. And like you said, like they opened the floodgates. Like the cat is out of the box.
Yeah.
It's going to be really fascinating to watch from the outside. And I don't know who it benefits or doesn't benefit, but I'm curious to watch. Well, can I end on I have one note at the bottom. Well, I have a bunch of notes, but my last note, three words. Good for NOVIG. They've been awesome people when we've interacted with them. Again, I'm partial. They sponsor our page. Outside of that, their product is awesome. I live in a state that it is not legal to use, and I am really bummed out about that, because I have to use, if I want to gamble legally, a legal sports book like a FanDuel, like a DraftKings. And I see the two side by side, and I see how much I'm getting ripped off on one and want to use the other. So my kind of last thing was, good people equals good opportunity. Like, good for these guys. They have all the backing that they need right now. If they are able to get the regulation or get classified as they want to, I think like, I don't see why they can't become the next evolution as the guys in the space, right? Federally legal sports gambling in somewhat of a truly fair market that gives you an actual chance to win versus what you're playing right now on a big casino sports book.
Great for Novig. Super happy for Jacob and the whole team. We had sent a cold email to them, and they, like you said, they've been only respectful and nice and courteous to us, and we've gone back and forth with some of their people, and to even just get a response from Jacob, I thought was a really cool guy move.
Even if he just said no, sorry.
Even if he said no, at least the guy responded. It obviously seems like really fucking sharp guy. Jacob, we'd love to have you on the show, and you can hopefully, if you ever see this or you hear this somehow, some way, we'd love to ask you some questions about the deal, about the Series B. Good for Novig, really happy for the whole team. And I just thought, what an opportunity to be, affiliated with a company that's doing really well. We're rooting for you. And we're super excited, and we'll be following along very closely, obviously.
100% well said. For Mr. Andy Diamonds, for myself, this is the Founders Pod. We are back. Peace out.